Welcome to Tanks Invest. We're talking about investing, finance, and professional development. As a recording time of 3:39 p.m. on the Eastern Time, Ethereum currently trading $2,424, down about 4.54% so far. As you can see clearly on the overall crypto market, it's kind of a mixed bag at the moment, with Bitcoin and XRP leaping back up to the positive side of the spectrum. While on the altcoin side of the house is also normalized as well, and on the equity side, we have revived significantly back into the greens. You could see that clearly Nasdaq is at the green at the moment, while up about 0.01%. In comparisons to earlier today, down to about close to 2.79% at one point. And I was like, I've been observing the market the entire day. The worst time that happened today was happening around like 11:30 a.m., 11:45 a.m. on the Eastern time, and it also coincides with the typical transitional time period when the West Coast people in the U.S. start to wake up, and when the East Coast people start to normalize in terms of the market front, right? And that was also the time when the interest hiked to the highest level at close to about 2% today, and at the same time when the VIX, which is the volatility index on the equity side, also surged to the highest point as well. Obviously, I'm speaking on a daily spectrum, not the entirety of the historical record. I'm just talking about as of today, right? And as you can see that clearly, just approximately about like 20 minutes away from the market closing, we've revived nicely, right, across the spectrum. And today was a classic huge panic mode, and people have been panic selling ever since last, I would say, Thursday, Friday. If you talk about crypto, this past weekend and obviously today, cultivated around the Blockbuster event that's going to be happening tomorrow and on the subsequently on Wednesday, hosted by the movie star Jerome Powell. I don't know why I said he's a movie star. But he's going to be the star of the show for tomorrow, right? Which he will be painting us a picture on the economic outlook going forward with respect to the interest hikes. Are we going to be expecting 4? Is the timing aligned with Goldman Sachs' expectation? Sometimes around March, I think June, September, and November, respectively. Or are we going to have more interest hikes? Maybe 5, or maybe 6, or maybe even more, right? And also on top of the fact, we're gonna hear more about the COVID relief supports that Joe Biden has been triangulating on a domestic level. How is that going to be hindering the job numbers? How is that going to be hindering the tapering or the quantitative tapering that we've been having? Are we going to need to shave further down on the bond purchasing going forward, right? And if we hear any more keywords along the line, it could technically, be more correction. But my gut feeling, again, is that because of the fact that today has already been a negative day, right? And we've been experiencing negative days for multiple days already, right? The Feds, in terms of their verbiage and in terms of the delivery and some of the keywords they're going to be watching, it'll be extra cautious and be extra sensitive to the market tomorrow, right? And I think we are gradually trending in a positive direction, a progressive perspective. And I think if the verbiage comes out tomorrow is going to be in alignment with Wall Street expectation, the market's going to look for a reason to rebound. And I think this is just another reason for the technicals to confirm us onto resurging back up to the normalized level, right? Today is extreme fear, uncertainty, panic in full mode, right? And when you see these type of, affectation among the market cultivated by, again, the couple of factors, right? I just want to count them one by one to us, right? The Fed meeting tomorrow and obviously on Wednesday. The Russian crypto ban that happened last Thursday, right? The potential breakout of the war between Ukraine and Russia, right? The tech earnings that's going to be coming out, right? And we're going to listen closely on the tech CEOs or the management team on their economic outlook on how we're going to be seeing their perspective on in terms of how we're trending going forward, right? And if there's anything negative along the line, coming from the management team on these respective companies, and these respective companies want to keep an eye out on, would be Apple and Microsoft. If their verbiage is in alignment with Wall Street expectation, which could technically rebound the market again, right? And I think we've seen that based on our last meeting with Jerome already, right? Last time we had, I would say collectively, a green day on Monday because of JP Morgan's Jamie Dimon's depictions on the economic outlook for 2022, also supported by Goldman Sachs. Subsequent to that, we had a meeting with Jerome Powell, which his alignments of verbiage correlates with Wall Street expectations. So that was another green day. Subsequent to that was the CPI report. That was also a green day. But subsequent to that, it was the PPI report that subsequently tanked the market, right? So you see the chronological effects that we're seeing. So knowing the fact that the market can only go down so much, as you go down further and further, the G-force is going to be exponentially more increased than days before, that it's going to look for some reason to rebound. So I do foresee possibly that tomorrow might be a day for the market looking for a reason to rebound. Ultimately, that's my gut feeling. I'm just trying to think in investor shoes, right? I think we are seeing some indicator already in the in the post, approximately two close post market perspective. We're basically 15 minutes away, that we are reviving right now from the lows that we were testing to 2,150, which is the level of consolidation that we've identified so far, right? So we'll see. We see how that goes, but we are rebounding nicely among the spectrum right now, and we're still relatively depleted. So, in addition to that, let me just take a look at the news to see if there's anything that's really worth mentioning beside the things that we've already talked about. I would say collectively, just more regurgitation news. Talk about the sell-off that we've been experiencing collectively. So nothing really worth mentioning beside what we've already been talking about. I would say we're relatively diligent in terms of keeping tracks of everything. Despite me, I was on vacation last week, but I was still very diligent and vigilant at the same time. So let's just dive into the technicals and not waste our time reading on the news that, frankly, is not that supportive or substantive at all. So with respect to recording time of 3:47 p.m. on the Eastern Time, Ethereum contract $2,429, about close to 4.5%. We bounced closely at the 2,150, which is basically $10 above the consolidated level. We subsequently leap back up to the current level at the 2,400, which is a good sign. We are reviving. There's no signs of confirmatory signals on the reversal yet, but we are rebounding back to the next normalized level because we're really, really depleted, right? At that point, when we went at 2,160, we were basically at the 20 out of 70. So that was like drilling oil, looking for dinosaur fossils, or dinosaur eggs, if you may. And right now, we basically bounced to more of a normalized level that justifies the market sentiment. It's 25 out of 70, so it's still really oversold. We're basically comparing, relatively speaking right now. Is it extremely oversold, super extremely oversold, outrageously oversold, or just oversold? I think we are at the moderately extreme oversold level, if that makes any sense at all right now. So the market is freaking out, and for those actually think logically, like we've been thinking logically, is to capture this by capitalizing on it. And I think if you bought in at the 2,150 based on our technical analysis so far, if you've been watching earlier today, you are rewarded nicely right now, up about $300 if you bought one Ethereum, respectively. Bitcoin's reviving as well, up about 0.55%. I would say we are slowly curving up on the MACD front. We are at the 27 out of 70, so this is a good sign, right? We are slowly reviving back up. Obviously, we crashed down all the way to the 32,900 earlier. And the reason we got there is because 33 is a flat number, and that's the reason we rebound from there. And at the moment right now, we're basically contemplating, do we go back up to the 37,500, which is the next level we need to consolidate before we continue to leap up to 40. All right, so this is something we have to be thinking about. And I think tomorrow, again, right, my gut feeling is tomorrow is going to be a green day because of the fact that the market's looking for a reason to come back up. And also the Fed is not going to let us fail. I think this is probably not the most logical notion because for them to revive us, something negative has to happen, right? It's either be printing more money or something that is more long-term detriment onto the overall economy, onto the market, right? So eventually someone or something has to pay. But tomorrow, I think the Feds are going to be extra sensitive. Jerome might be treading water tomorrow, and he might be extra careful with his verbiage tomorrow, which I wouldn't be surprised. And with that alignment, should technically rebound the market again, right? So Dogecoin right now 1366, down about close to 4%, 39 out of 70. Again, not the most attractive in comparison, but it's still oversold, right? It's more of a relative speech at the moment. I would say Bitcoin and Ethereum are still more attractive. Cardano's at 108 right now, rebounding nicely to approximating going back up to the 110, which is a flat number, but the real level is 119.57, right? With the 40 out of 70, so I would not really touch this at the moment. I would still look for Bitcoin and Ethereum that are more attractive in comparison, right? Solana is down about 2.3%. We're reviving nicely as well. Bounced from the 80 earlier today. And I would say 80 happened around, again, like 11:30, 11:45 a.m. this morning. At the moment right now, RSI is not really showing. I think there's a glitch going on. So let me just go back. There we go. With the 24 out of 70, so still really oversold. But obviously when we're 80, we were like basically at 19 out of 70. That's really crazily oversold. So whoever bought the dip of Solana, congratulations to you. XRP is up about close to 1% so far. 57 is basically the bottom, exactly, and that's the reason why we bounced from there. And you could see that we were submerged at 24 out of 70 at that point. So right now we're rebounding nicely, up about close to 1%. So congrats on the ones actually bought at the 55 right now. You are making a, some sort of a gain right now, like up about 1% if you count like dipping to 55. Like that's about like 3-4% so far. Polkadot is like flat again. Anywhere from current level to 1582 is still logical at the 29 out of 70. Algorand is down about 2%. Anywhere from current level to the 79. I would say, I would start incurring risk somewhere around 85, but Algorand's like a falling knife right now. There's really no bottom. The real bottom is technically, I guess, 80 or like 80 cents because the flat bottom is basically at the 79. And that's just purely market appetite, not because of technical support. So because there is no support, this is just basically the lowest of the lows that we've ever been to. Shiba Inu is down about 5%. Anywhere from current level to the 1708 is still logical. At the moment, it's 31 out of 70, so it's not the best, not the worst, but not the best choice if you compare all of it, right? MACD is down about 6% right now, anywhere from current level to all the way to 120. I would prefer anywhere in between 145 to 120, still better level for us based on the setup right now. AVAX down about 2.5%, 59 to 50 is still better level for us. Luna, 62, 52 to 45 from here, based on technical level. I would not really touch Luna at the moment. And in respect to risk management level, these are the updates that we have had as of 3:28 p.m. on the Eastern time, so not that long ago. Obviously, I'm updated on a live basis. And let me know if you have any questions. It seems like we're reviving nicely. We're still in the steel and extreme steel level at the moment. And I think it's logical to be taking the right risk, right? And that's the reason why we have the cash reserve allocation methodology that we've laid out in front of us here, right? And I think right now it's logical to be a little bit more aggressive in comparisons to days and weeks ago, right? Because as the price goes down, the risk also goes down. So remember that. So hopefully you guys did the right thing and no panic move today. Just like stay cool as a cucumber, or just go do your job or work, right? Or like ignore, or maybe go to the gym, go out for a run, maybe spend a day at a spa, treat yourself. Just don't sweat it. This is gonna rebound. This is just a market cycle, and today is just a overreaction from panic, purely. Fundamental doesn't really hold today, and for those again that thinks logically is, gonna be rewarded nicely. So I'm exhausted now, so I'm gonna shut up. But appreciate you for joining me again, and hope you guys have a great day. Take care.